Hey, it's Clay at claytrader.com. This will be my top 10 stocks as we head into Friday, March 4th. This will be a technical analysis breakdown. So if you're someone that uses charts within your trading, or maybe you're just interested in learning more about charts and how they can be used as a tool to help make good decisions as a trader, then this will be a video for you. Before I get to the watch list, I first just want to personally invite you to get signed up for this free live online class that I'm offering. So if you're liking what you see as I go through the video and you want to learn more about this tool, how it can and should be used to build consistency as a trader, then certainly get signed up for the free class. Now, one note here, it is going to be this evening, depending on when you watch this video. So if you're watching it on Friday morning, for example, then yeah, you've already missed the class. But with that being said, go ahead and drop me an email, clay at claytrader.com, because it will be recorded. So because it's live, after it's all done and after I get it uploaded, I can send you a link to it. So drop me an email, clay at claytrader.com. Or I understand if you're watching this after the close, but maybe you already have something on your schedule this evening, then still, drop me an email and I'd be happy to send you a link to it. Now, a couple of quick clarification points here. First off, I will be using the 30-minute time frames here for a beginner. All that means is that each one of these candlesticks, as they're called, represents 30 minutes worth of time. And then next, the market is still open for a little bit of time. So yeah, the prices you see over here will still be changing. The candlesticks will be still moving around. But I like to do these videos when the market's still open for a bit, because sometimes we can capture some really interesting late day action live as it's playing out. But the market's also close enough to being done for the day, where everything I talk about will still be relevant as we move into Friday. So first one here, ticker symbol IMPP, which I've been tracking quite a bit. And overall, depending on kind of how you played it is going to, depend on how the chart looks, because yeah, to be fair, started off very nicely. Actually gapped up above this resistance line right there, that red line that I talked about in previous videos. The problem is that now by the time the closing bell has shown up, you can see that the price has actually dropped back down below that area. So depending on where you bought, meaning if you're a day trader, flipper, scalper, and you were buying there, or maybe you're buying there, or even right there, and if your plan was to buy and sell within 7 minutes, well then yeah, from that perspective, the chart looks really, really nasty. Now, if you care about things from the big picture point of view, yeah, today was still not that ideal to get the breakout and then fall, like I said, fall back below the level of resistance. However, taking a step back and looking at everything from more of a bigger picture point of view, when you look at these lows compared to those lows, and if you envision each one of those as stair steps, well, from the big picture, you still do have plenty of, upside progress being made via stair steps, progressing in the upwards momentum. So like I said, that'll dictate, exactly, is this a bad or good looking chart? Well, hard to say, because I don't know what your perspective and strategy was going into it. As far as kind of that new level of resistance moving forward now, whoops, let's change that. There we go. New level of resistance now going to be that trend line right there. Pretty crazy how well that did of forecasting any sort of movement to the upside. So if the price does recover back upwards, and right around, let's call it the 250 mark, will be that main area of resistance. Next one, NIO, absolutely brutal day. More so morning than anything else, because for the rest of the day, not much happened, and I'll point that out. But you can see first 30 minutes of the day, brutal. Next 30 minutes of the day, brutal. And then after that, things just kind of went sideways. Now, let me be very clear. Just because something got beat up and then went sideways, does that mean that for sure this is the bottom and that for sure the price is getting ready to head back upwards? Absolutely not. No such thing as a guarantee. But my point here is it at least valid? Is it at least rational to think that, okay, the price has finally been able to level off here right around this 1975 mark? I mean, you can see here, it did bounce off it previously a few days ago, but then right here you can see it's just been going sideways right at that level. So does that guarantee anything? No. But is it plausible? Is it valid to think that, okay, maybe this sideways action and the fact that it's occurring at this former support might be getting ready for some sort of bounce? Yeah, completely plausible thought process to have. So keep an eye on 1975. However, if 1975 does fail, then that would just illustrate that the bears are picking up that much more momentum and strength. So that'll be a very important level of support to watch. As far as areas of resistance are concerned, main overarching level going to be all about that purple line there, that famous 50-period moving average. And right there, that's why it's famous. You can see ultimately right where the price did get rejected back to the downside. So keep an eye on that. But in my opinion, at least, the most relevant and most pressing kind of manner right now is, how does the price going to behave above 1975? Can it hold? Or are the bears going to be able to push down through it, which could bring in that much more shorting? Next one, INDO, an overall good-looking chart. Again, a little tricky to talk about from, where I sit, presentation standpoint, because if you're a day trader, you bought there, or there, and you were looking to play some sort of, 5-10 minute breakout, well then, yeah, from that angle, things look really, really bad, because this afternoon, the price pulled back. But if you care about the grand scheme of things, even with that bigger pullback, the overall chart is still making plenty of, stair steps in the upwards direction, and that's what ultimately matters most. As far as the level that I would definitely consider very, very important moving forward is going to be right down here at $15.25 because that's a former breakout area. And the last, and I'm not saying this will occur, but just for explanation's sake, if the price were to come down to that level and then fall back below it, I mean, what would you have at that point? You'd have the price all of a sudden right back inside of this big old range that it just broke out of today. Again, I'm not saying that's what's going to happen, but just explaining, what would be a very important level that I would consider moving forward. Definitely that 15.25 mark. But if the price does come down there and maintains above it and then works its way back upwards, that's just to illustrate that it's not like the price has to go straight up in order for the overarching chart to remain, bullish, because the price could do that and you'd still have lows there, lows there, lows there. And like I mentioned earlier, you'd still have these stair steps progressing in the upwards direction. So 15.25 certainly going to be a key area of support. As far as resistance levels are concerned, keep an eye on that trend line up there, which sits right around, let's call it the 24.50 mark. Next one, TNXP, penny stock here. That's looking pretty ugly, but as you longer time viewers have heard me say before, there can be opportunity in ugly. And in my mind, if this thing can get a little bit more ugly, let me make sure I'm not missing out on anything. Yeah, if this thing can get a little bit more ugly and come down to this former breakout point right here around 21 cents, that presents a very interesting opportunity. Now, again, no guarantee, so I'm not saying that. But is this area valid? Is it logical? Yeah, it absolutely is. This would essentially be the former breakout area right here. And, basic technical analysis, when levels of resistance are broken and closed above, you want to see them act as support. So 21 cents, and then along with that, you also have these moving averages creeping right up around this general area. So there's a lot of supports down around that area. Once more, does that mean that the price will for sure bounce? No, but is it plausible? Is it a logical thought to have? Absolutely, but as always, especially with these sorts of situations where very clearly a lot of downwards pressure has shown up, risk management matters. But like I said, if you like to play those situations where, potentially everybody else is just giving up, waving the white flag, because, that's where things tend to turn around, then 21 cents is a very interesting area from that point of view. But yeah, the price as of now, at least in my opinion, is going to need to get a little bit more ugly. Next one here, AMC. I'm going to be very brief on it because nothing really happened. Now, yes, I realize today stuff did happen, right? It went up, it went down, all of that. But from a technical point of view and more so a broader point of view, nothing really happened. And I realize this will mean a little bit more to those that watch past videos, but if you haven't, well, you're going to get caught up on it real quick. But drew that area of support right there, and you can see price not anywhere close to it, didn't even test it today. And then the area of resistance, that red line, again, not really that close to it. Price hasn't even tested it today. So like I said, from an overarching standpoint, just a consolidation day within this pattern, just kind of choppy up and down, up and down. Now, if you're a day trader and you buy, sell, well, then yeah, again, from that angle, you're right. Stuff did happen. There were opportunities, but I'm talking about this more so from a bigger picture point of view. And from that angle, price is still stuck between those two trend lines. Next one, SOFI, rough day on this one. Not necessarily because it was red, but from a technical point of view, because a key level of support was broken, which is where our first update comes into play. And that's this green line here at $11.20, which I talked about in a previous video. But basic technical analysis states when levels of support are broken and closed below, they tend to act as resistance. So now $11.20 going to be the near-term area of resistance. So if there is any sort of, attempted bottoming out and then turning back upwards, the big question mark is all about that 11.20 mark. And first off, can the price get back up to it? And then much more importantly, can the price actually have enough strength to push above it and stay above it? So keep an eye on 11.20 from the resistance side of things. As far as supports are concerned, next key level to watch closely going to be right down there at $10.50. But yeah, overall, not a very good day. And this has all turned out to apparently just be a big old gap and trap after earnings where the price gapped up and then since then has just continued to bleed and bleed. Next one, VEON, and this is one where definitely, if you're not a disciplined trader, you shouldn't even be thinking about touching ones like this. But if you are, then yeah, there could definitely be a nice structured risk versus reward scenario here. Because let's face it, this thing has gotten absolutely pulverized. I mean, was sitting up here around a $1.50, we'll call it, and now all of a sudden is down here at 26 cents. And this has all occurred in just a couple of days. And if you've traded for a while, then I'm sure you've seen stocks like this can produce some very nice bounces. Once more, of course, not guaranteed to happen. You're never quite sure when those bounces are going to take place. But that's the whole idea of a watch list, right? To find unique situations and then watch them and see if anything happens. So in my opinion, the first kind of indicator that maybe this thing is getting ready to, make a bigger bounce would be, let's see if the price can get up here to that 30 cent mark and then push up through it. Once again, If the price breaks 30 cents, does that mean that guaranteed a big bounce is going to come? Absolutely not. But is it valid? Is it plausible to think that way around the 30-cent mark? Yeah, in my opinion, it is. And then just from a basic support standpoint, and nothing fancy here, other than the fact of, where did the bleeding finally stop today? Well, that was at 24 cents. So 24 will be the main area of support for that reason. But as far as, just the brutality of which this one's been beat down, there can be some very, very tradable bounces that come with these. So let's see what happens with it on Friday. Next one, NVDA, NVIDIA, and I like this one just because there's a couple of very well-defined levels, and when areas are well-defined, that means a lot of people are watching them, and when a lot of people are watching certain levels, call it a self-fulfilling prophecy, call it whatever you want, it can produce some very dynamic movements. And the two levels here, so I should take a step back. I'm not trying to imply that this is some sort of great skill that I have, or this is a special discovery. Nothing like that. Again, I assure you, people that understand charts are watching these levels, so we do have that self-fulfilling prophecy type situation. But the first level here that all sorts of people are going to be watching is that pink line up there, the 200 period moving average as a breakout point and level of resistance. You can see right there, price got rejected from it and then didn't hit it exactly, but within the general area right here, it got up around that area and once again held strong as resistance. So while nothing is guaranteed, it's more than plausible to think that if the price could get up to that pink line and then push up through it, that break could very well create quite a bit of upwards buying pressure, because there are people that are saying, hey, I'm a breakout player. Oh, look, this is breaking out. I'm supposed to buy right now, so they're going to buy. So keep an eye on that level as that main area of resistance. And then as far as supports, this area down here at 231, there's going to be a bunch of people watching that area as it's done a good job of holding support now several times, including shorts. So that there's going to be shorts watching this area and thinking, if the price breaks below there, that could create some good downside pressure. And they're not wrong. But there's also going to be the long saying, well, I think the price might bounce off that area because it's done it before. Those people aren't wrong either. The point is, that's why risk management matters, because somebody's going to be right, somebody's going to be wrong. Both people are thinking logically, both people have valid trade premises, but still the market offers no guarantees. But point here being is 231 will be a very, very watched level. Next one here, AMD, and what I'm very curious about this one is due to the late day action here, and the late day action specifically being in regards to this little pattern here that had formed. But you can see late day, the price seems to be breaking down to the downside. Now, it's not like it was a total catastrophe. In fact, this last 30 minutes here is forming a nice little hammer candle. So maybe this is just a fake breakdown. But the whole idea here, and again, the idea behind a watch list is, okay, in technical jargon, this would be known as a bear pennant pattern. So the bear pennant has been broken to the downside. So the question becomes, why would it be on the watch list? Well, let's see, is this the start of something bigger? Is there more downside pressure to come? And if so, then shorts would be interested from that angle. But longs are also going to be interested saying, okay, well, let's see if this breakdown is strong enough to bring it down to that 108.75 mark, which I've mapped out as a support, because before you can see that the price has bounced off that level. So like I said, shorts are wondering, is there a tradable opportunity down to that area? Or shorts might think, I think it might break through there. But longs are also thinking, well, I could see it breaking down and then recovering back from that area. But the point here being is that's really the main dynamic here, is that this bear pennant has been broken to the downside, but is it the start of a bigger movement to the downside? We'll have to see what happens on Friday. And then next one here, TSLA Tesla. I put this one right after AMD because same exact principle is in play here. You can see that the price has come down. It's broken down through that lower area of the pattern, and it's gotten a little bit more separation. But again, now we have the big question of, okay, is this a leading indicator of a much more bearishness to come? Nobody knows that, but what people do know is it's now plausible, it's now valid, I would argue it's now wise to be asking that question, because this pattern here has been violated to the downside. So like I said, if it is the start of something bigger, the next key level of support to watch very closely is going to be this former breakout area right down here around $815. I'm going to actually go ahead and get rid of that trend line there as it served its purpose. If there are any sort of bounces, then yes, you still do have the overarching trend line up here. But the more relevant one is now going to be this grouping of moving averages. Again, purple line 50 period moving average, pink line 200 period moving average. And they're both essentially valued at, let's just call it the 862 mark. So like I said, if there are any sort of attempted bounces to the upside, 862 will be that first key level of resistance, followed by the overarching level up there around, we'll call it the 880 mark, which, like I said, though, is kind of irrelevant right now. But if this is the start of a bigger breakdown, then I don't think anybody would be shocked to see it head down to that 815 mark. And then how does the price behave if it gets down there? Well, we just have to see. But that's the main dynamic here is big breakdown. Is it the start of even more bloodshed to come? We'll see what happens. So that wraps up the top 10. Again, if you like what you saw here and you want to take your understanding of this tool to higher levels and learn about how it can and should be used to build consistency, then certainly get signed up for the free class. But like I said, if you already have something on your schedule this evening, or if you're watching this Friday morning and the class has already happened, it will be recorded. So after the live event's done, recorded and uploaded, I can drop you an email. So just shoot me an email, clay@claytrader.com, and I would be happy to send you an email back to the link to the event. But of course, if you can make it live, then definitely get signed up, and hopefully I'll see you there in a few hours. But overall, thanks for watching, thanks for hanging out, and hopefully I'll see you at the class. But if not, like I said, just drop me an email.